Hi, good morning. Good morning. Yes, I had two questions. One is regarding. Would you? So, I'll go for the first question first. So, would you recommend? So, let's say I withdraw part of my capital, basically like part of my profits from my trading account, and then use that to buy a property with half cash and half finance. Second thing is. When you buy a property, your money kind of gets stuck in case you're not able to find a buyer quickly. So, are there any other ways you've diversified that, diversified your income, which you would recommend? Just these two.
Hi, Limesh. One thing, right? So, in terms of withdrawing it and putting it into property, that's half the point. That it's not liquid and you're not looking to liquidate it. But at the same time, you need to have liquid reserves. So, like for example, I have FDs which are outside the market. Why can't I just buy bonds and pledge that and trade that more? Because I don't want it in my trading account. So that is liquid money that I have outside. Now I pay. I'm a part of an organization, right? So I pay PF for myself and I pay PF for all my family members, and that way this is money that's locked away which I cannot access. That's half the point. Look, I said this many times, but it's not about maximizing returns. It's about not having too many eggs in one basket and about creating many nest eggs that never want to use, but you have access to. Like for example, my daughter, she's like 14 months old. There are investments in her name. Like she has her own demat account and she has index funds and she has bond holdings. Why can't I do that in my corporate account and pledge that and trade? Because I'm not looking at maximizing returns. I want to have enough baskets, nest eggs outside which I don't touch. And in terms of real estate also, whether you should finance or not, really depends on individuals. For example, I don't do financing. I have zero debt. But at the same time, I will not purchase large ticket size properties either. So, in fact, larger ticket size properties are probably slightly easier to liquidate than smaller ticket size properties. But the thing is, the yield on smaller ticket size properties will be high, and I'm anyway not looking to sell. The way I see it, right? Investing, be it into real estate or be it into stocks, is not for the idea of I will quickly get rid of this investment and put it somewhere else. It's a very non-trading approach. It's about I'm going to create something for myself, for my family, which is going to exist. Okay. Now that is separate. Now I forget about it. So that was the thing. What was your first question? I'm sorry, I couldn't hear part of your first
Uh,
question.
so, you actually answered the first question. The second question was: are there any other methods of diversifying your money apart from real estate? Because although I got a question, there should be you want to put some money away from the market, but are there any easier ways
Yeah,
of diversifying your money
of
outside
course.
the market?
Of
Means
course. So,
like
like most
primarily
people hate,
liquidity.
FDs, but FDs are not a bad tool, especially at current this thing. Then you have obviously you can buy gold, you can buy silver, things of that nature. I'm not into crypto, so I would not recommend crypto. And if the ticket size for real estate is too large, many people recommend REITs. I don't recommend REITs because all the REITs are at the end of the day managed by that particular builder, and builders in India are just not trustworthy. I don't have faith in any of the builder because at the end of the day, what comes down back to us through that rate will be less. Because in India, I don't know if you know, but a lot of building activity happens in black. There's a lot of transactions, this that. So finally, I would much rather own my own piece of office space than be a part of a REIT where it's managing like lakhs and lakhs of square feet of office space. So apart from that, as I said, like there are, for example, if you are an employee, you can take voluntary PF, that as well. So it will not. These are not for high returns. These are for you have money stashed everywhere. Put money everywhere so that you never feel like in a rainy day that, oh, I have too much concentration in something. And of course, you have stuff like gold, which Indians have been doing for forever, but it doesn't go much beyond that. It's either like precious metals. I'm not a crypto guy, so I just will not comment about crypto in this real estate or debt.